This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed. We are across Bloomberg platforms. Carol Massar, along with not Tim Stenivek, getting a much-needed break this week. Joe Doe is with us. Thank you so much. You cover economic statecraft. You cover so much of, I feel like, so much of our world right now, whether it's war, minerals, economy, global economies that all fit together.
Yeah. I mean, that's where we are in the world these days.
It is,
right? You can't avoid it.
No, we talk about follow the money with everything, but it's very true. Follow the money in the markets.
Yeah.
You ready?
Ready, let's do it.
We got a lot coming at you. Although, I have to say, it's a little bit of a mellow market trade today, but not when it comes to some of the AI stocks. So we're going to get into that. We do have some news that came out from Bloomberg News reporting. We start to get more in terms of understanding the valuations, the balance sheets, the businesses of these companies that have yet to go public, like Anthropic. So we're going to get into that. Also, we've got a U.S. bond sell-off driving 30-year yields to the highest since '07. We've got WTI crude slightly higher as we continue to keep a watch on that U.S. war in Iran. We're going to get more on that in particular in the 3 o'clock hour, as well as the trade in just a moment. Coming up, though, we are going to talk about the Anthropic rush, Joe, that is pushing AI stocks higher. It is what I call a meh market, but some of those AI stocks are on the move.
Yeah, I mean, this is the fire in the market right now. This is if you wake up on a Monday morning, everything seems slow, but this story seems to be the major attention.
Absolutely. The narrative continues. You brought us a great guest, Peter Harrell, visiting scholar at the Georgetown Institute of International Economic Law, former Biden White House Senior Director for International Economics on U.S.-Iran, U.S.-China. I feel like I want to talk to him for an hour already.
He's terrific to talk to for an hour.
We don't have an hour, but we're going to dig into some really good issues. And then we're going to get into the Guggenheim CEO. Some news just breaking about an hour and a half ago as he continues to sell off some assets. It was the LA Lakers last week. A great deep dive, a big take. We're going to talk about that in just a moment. First up, though, let's get a check on the trading day. On this Monday, in for Charlie Pellet is Amy Morris. Amy, take it away.
I thank you, Carol. Stocks and bonds falling, fresh Middle East violence lifting oil prices, stoking concerns about an escalation of the war that has jolted global markets. We do check these markets for you all day long here at Bloomberg. The S&P 500 now down 0.4%, NASDAQ down 0.3%, the Dow down 0.5%, Russell 2000 index also down 0.5%. But the Philadelphia Semiconductor index is up 2.2%. The 10-year Treasury yield at 4.72% and the 2-year yield at 4.17%. Crude oil now jumping nearly 3% higher. WTI closing in on $85 a barrel. Brent crude has been bouncing right around $91 a barrel. The AI trade getting a lift in trading after news of Anthropic's stunning sales growth. Second quarter revenue increasing at least 14-fold from a year before to over $11.5 billion. Equinor strengthening its position in the U.S. power market. Equinor has agreed to acquire an interest in the Lackawanna County Energy Center in Pennsylvania. Under that agreement, Equinor will acquire more than 87.7% of Lackawanna for $940 million. Equinor shares about 0.5% higher. The Supreme Court has refused to let Verizon try to recoup $47 million that it paid after being accused of privacy violations by the FCC. Verizon says it only paid that money because it was misled by the FCC's characterization of the forfeiture order. Verizon shares and AT&T shares about 0.5% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Businessweek Daily with Carol Massar and Joe Doe.
Terrific. Amy, great to have you here with us on this Monday. All right, as we mentioned at the top, those AI-linked stocks are rising today. We had Anthropic, a great story by Bloomberg, out late on Friday, I believe it was, telling prospective investors that its preliminary second quarter revenue was $11.5 billion. And at least 14-fold increase versus the same period a year ago. These numbers, just are amazing.
I mean, these are numbers I think when people talk about how big AI is, that none of us can really wrap our minds around it. It's those type of numbers that you're like 14-fold.
Right. And
What?
I feel like we keep getting them over and over and over again, right, as we watch it. So we've seen names like SanDisk, Marvell, Coherent, Western Digital, and a few more AI-related names that are definitely outperformers and rallying in today's session. So there's a lot going on. We want to start on Anthropic specifically, though, with our own Bloomberg Intelligence Global Head of Technology Research. He is the guy we say, why? Explain. Mandeep Singh is with us in studio. Welcome back. You had a good break?
Thank you for asking.
Were you reading a lot of AI stuff while you were away?
I was trying to limit it.
Good. I'm glad to hear that. There's a lot this morning. Anthropic, and today, I should say. Stunning sales growth. Is that the right read?
It is, and it's consistent with what we have heard so far about the company from different outlets. You know, there's always a data point dropped in here and there, whether it's token growth or in this case, you know, the revenue run rate for 2Q. But look, these are staggering numbers when you compare them to any tech company growth over the last 30, 40 years. Yeah, it's unprecedented.
Any tech growth.
Any tech, like software companies were notorious for this kind of growth, but now we are talking, you know, 10 billion plus in a quarter. And they seem to be quite optimistic about sustaining this kind of, you know, 5 to 10 times growth. So that will easily take them to 100 billion plus by the end of the year.
It's amazing.
And, you know, it'll be one of the largest software companies out there if it crosses 100 billion. So it is phenomenal in terms of what they have achieved. And the trajectory seems to be at least sustaining for the near term, which is what's driving all the enthusiasm.
Yeah, and you know, I think one of the things that's constantly talked about here is the type of capex involved for these companies, right? If you're in an industrial space, capex is just a daily part of the conversation. But if you're kind of in the tech space traditionally that we've seen over the past 20 years, capex is just not the same kind of conversation. These companies are very much in that game. And maybe what we're seeing now is the massive capital outlay is starting to show in returns.
It is, and look, I mean, we're talking about adding another possibly, you know, 20 gigawatts this year, another 20 gigawatts next year, and the rough equation so far has been $50 billion per gigawatt. So that gets us to $1 trillion in capex annually, and we know the component prices are going up, whether it's memory or some of the storage components. So from that perspective, the ROIC debate continues to go on, even though you see the revenue numbers from Anthropic. I mean, the ROIC hurdles continue to get, I guess, bigger and bigger. But right now they are getting the financing and everyone seems to be on that bandwagon where they want to invest in AI.
Could we talk about those gigawatts for a second?
Yeah.
Because I think people who are really in this, they keep talking about like the real bottleneck here is the question over the ability to scale up the power that's supposed to go into this. What's your take on that right now, especially when so many people, when they talk about that, are coming from a more bearish perspective, I think?
I think because you have seen that steep ramp for Anthropic. So Anthropic got to 47 billion in ARR with whatever 3 gigawatts of power they have through different clouds and different sources that are available, give and take. Same thing with OpenAI, they have about 3 to 4 gigawatts. All these cloud providers, like Alphabet, I mean, it's doing another bond issuance because they want to build capacity. So the reason why everyone sees that equation in terms of revenue per gigawatt, how much it's costing and how much payback period is, whether it's 2 years or longer, the rental prices of all these GPUs have held up very nicely. So from that perspective, you have a lot of proof points that show that the compute investments that are going on right now have a pretty decent ROI in terms of just the raw compute side of things.
I'm so glad you mentioned Alphabet, right? It's looking to raise about $5 billion. That's Australian dollars. I think it's about $3.5 billion US. I don't know if I've got that right, but I'm just looking here at my numbers. 3.6 billion US here. And this is in Australia, right? So they're tapping global bond markets. What's important here? Is it just a reminder that this is going to be happening in the months and years to come, and this is just what it's going to cost? Or is it a sign that US investors getting a little tired of all of this and they've got to tap other markets, and maybe that's a sign to be concerned about? or neither?
Alphabet seems to be ahead in terms of, just tapping its investment grade status and using it wherever it can to raise money. I mean, it's also doing an equity issuance.
Right.
So from that perspective, I feel they have the best unit economics right now when it comes to building these data centers.
You've said that a lot,
because
right?
of their own TPU chips. Everyone else has to buy from Nvidia. So Alphabet's case, their cost per gigawatt is the lowest. And so they want to be the most aggressive out there in terms of raising funding from all the sources. They have hit negative free cash flow for the first time since the IPO. So that could concern some investors, but it's an investment grade company. So that's why I guess no one cares right now.
Mandeep, I got to ask you about Nvidia. You mentioned it a couple of times. They've agreed to spend as much as $105 billion to support a massive new data center campus in Ohio, set to be leased by OpenAI. This is according to a financial filing. It's kind of the latest tie-up between these two. Separately, Nvidia has agreed to invest $1.5 billion in SB Energy, the SoftBank Group-backed developer that will build, own, and operate the facility. Another circular financing deal, or what's your read? Because it just feels so cozy here.
I mean, now Nvidia is at a point where it can flex its balance sheet like the hyperscalers. That wasn't the case a couple of years back when, it didn't have this book of business. But now with the high free cash flow margins and the cash that's sitting on its balance sheet, it can go out there and pretty much invest in any entity and support their funding, which is what last week was pivotal in terms of rallying all these private equity companies and up to $500 billion in private equity capital with the support of what Nvidia is doing with its own balance sheet. So they really are funding everything where they see there is a gap.
Feels like FOMO to me a little bit. but we'll see, right? But you look at the fundamentals, you look at the balance sheets, you see, the outlooks, right, and the backlog, and they're like.
That's what the hyperscalers are doing with their balance sheet. Nvidia is saying we want to do the same because we have the balance sheet to do it.
It's like the id, super ego. Like there's different parts of my brain that are like in conflict right now over this.
It seems like the math is mathing, though.
The math is yeah, no, and that's why we bring Mandeep in. Like to get an understanding of the actual math behind it. Thank you. We're glad you're back. We're glad you got a break, though, too. All right, Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, joining us. Hey, just a quick check on the markets as we begin a few hours into this new trading week. And, Joe, it does feel like I call it the Met trade because it just doesn't seem like a lot going on. But we are looking at equities near their lows, down about 0.5% on the Dow, if that's your index to love. S&P down about 0.4%. NASDAQ 100 just slightly lower, down about 43 points. But I always like to look kind of inside the index and just look at the S&P. Most names are actually lower, so it's definitely a kind of risk-off trade here.
Yeah, I mean, even when you expand out to, as you know, my background in commodities, I always look to see where WTI is trading, see where copper's trading. I mean, even those trades today are whatever, right? I mean, copper is down 0.5%. That's like a nothing day. WTI is up 2.6. I mean, 2.6 up or down, especially these past many months with the war in Iran. I mean, you that's kind of an easy day for you, but it's August.
It is August.
It's really starting to feel like those summers are getting deep.
I remember a time when so much of the summer felt kind of quiet, and now it doesn't happen, but I agree with you. I felt like last week a little bit, and definitely today. Hey, all right, so we talked about the AI trade with Mandeep. Let's get to kind of the market read on all of this. And I'm curious how our next guest is targeting any of it when it comes to portfolio design and ideas for investors. So great to have back with us Olaolu Aganga. She's head of portfolio construction and analytics over at Citi Wealth, senior architect of Citi Global Wealth's portfolio design and implementation framework within the chief investment officer. I mean, she's in it. Olaolu, good to have you here with Joe and myself. How are you?
Good. Thank you guys for having me, as you said.
It's great to have you here. You've got to kind of work through all the headlines, some of like what we did in terms of the AI trade with Mandeep. I am curious, what's your view when it comes to portfolio construction or implementation? How much of it should be exposed to the AI trade, and what are the specifics of that exposure in your view?
So there's a lot that's exposed to the AI trade, either directly or indirectly. But for us as fundamental investors, we're focused on where the growth is, where free cash flow is, where we're seeing durable earnings. And AI, but not just AI infrastructure trades, AI financing, all things related to the AI build out, whether it's energy that's associated with AI, data centers, it's got legs, and it's got legs beyond just tech. We're seeing that. We're in the tail end of earnings. 10 out of 11 sectors are doing pretty well. They've had positive year-over-year earnings growth.
Yeah.
So it's not just tech, it's really everything associated with that, and it expands to commodities, Joe.
Take it away, Joe. That's your cue.
It does.
Well, I mean, the energy question around the AI play is just, I feel like something I've been paying attention to now for two and a half years. Yep. But, you know, if we dive in a little bit more into earnings, it's not like AI, obviously, but fundamentals seem pretty decent for companies, right?
Yeah, fundamentals are pretty decent for companies. So, as we mentioned, if you start looking at every aspect of this, we're going through a pretty big transformation. There's the tech transformation, and now it's AI, and we're not necessarily seeing a whole read-through in the productivity gains just yet, but we are seeing a lot of consumption in the tokens. We're seeing a good, healthy amount in the prices there. So then you need cybersecurity to be able to protect that data, so that's one offshoot. Energy companies, you have to be able to connect to the grid, like you said, commodities, so that's aluminum, that's copper, so that's another extension there. You have to build out data centers. That gives us steel and material companies. So there are a good number that are actually getting revenue generation as a result of the physical AI build out.
When you're talking to certain clients who may just say, listen, this is so big, it's beyond my comprehension, how do you kind of handhold them through explaining all of that? I mean, it's a lot to just put into one bag, right?
It's a lot to put in one bag. But again, it's not just one quarter. It's like, what has durable earnings? And right now we have the ability to be faster, more productive, really streamline a lot of costs, really start transforming businesses that would have had to hire tons of people. You don't necessarily need to do that now. So AI is transformative across a number of different business models, which is where we're seeing the breadth. And not initially, there was a lot of talk around it being pretty narrow, but we're seeing the breadth across a number of companies because you don't necessarily have to spend as much to be able to get the transformation in your business.
Olaolu, I have to ask you about SpaceX. Investment firms for ultra-wealthy individuals have built up billions of dollars of exposure to SpaceX. We're getting some numbers, the 13F filings, total of at least $3.8 billion in SpaceX, a dozen family offices just in the first half of 2026. I am curious, and I know you probably can't go too company specific, but I am curious how much of your clientele is saying, I want exposure, or they've had exposure when it was private.
So
and just got about a minute.
Yeah, so the private markets makes absolute sense to be able to target businesses that you won't necessarily see in public.
Yeah.
We've seen companies stay private for longer. However, I will say, as fundamental investors, we focus on valuations and profitability. We're not necessarily seeing it here. You've seen a lot of volatility, and you do see a lot of volatility in IPO pricing at first, right? But then you wait for the business models to set in and see if it grows into the earnings. So that is one company. Again, we can't go into specifics, but you are able to, depending on the managers you go with, access some of the more innovative themes that are difficult to find in public markets.
Like Anthropic? OpenAI?
Those are a couple that you watch as bellwether AI names. And as they go, and those are indicators for how broad the space is, but they are an indicator as to the health and the strength in the AI theme.
Totally. Olaolu, Aganga, thank you as much. Always never enough time. We got to get you in for a deep dive real soon. Over at Citi Wealth, Head of Portfolio Construction and Analytics. When we come back, we home in on Joe's World, an economic statecraft. We've got a very special guest. Stick around.
It's 2:21 on Wall Street. I'm Amy Morris. The Justice Department probing venture capital firm Andreessen Horowitz over whether its investment partners are improperly serving on the boards of competing AI companies. The companies at issue include Databricks and Fivetran. Fresh Middle East violence stoked concerns about an escalation of the war that has jolted global markets, dragging down most shares in the S&P 500. We do check markets for you all day long here at Bloomberg. The S&P 500 down 0.4%, NASDAQ down 0.3%. 0.4%. The Dow down 0.5%. The Russell 2000 index also down 0.5%. The 10-year Treasury yield at 4.72% and the 2-year yield at 4.18%. Crude oil jumping now more than 2.5% higher. WTI nearing $85 a barrel and Brent crude near 90, now topping $91 a barrel. Philadelphia Semiconductor Index more than 2% higher, actually right at 2% now. It's being led by Micron, which is nearly 5% higher. Nvidia has agreed to spend as much as $105 billion to support a massive new data center campus in Ohio that's set to be leased by OpenAI, which will secure up to roughly 8 gigawatts of computing capacity. The first 800 would be coming online around 2028. Nvidia shares are a little changed on the upside. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Back to Bloomberg Businessweek Daily with Carol Masser and Joe Doe.
All right, so there's a lot going on in terms of geopolitics and how it impacts things like supply chains and just kind of the global grab for so much and how it impacts different economies. And when we were planning for the show, we knew you were going to be here. You're like, I've got a perfect guest.
That's right. That's right. We are fortunate enough to bring in someone I've known for a little while now, Peter Harrell. He's the visiting scholar at the Georgetown Institute of International Economic Law. He's also a former Biden White House Senior Director for International Economics, and he's joining us from Washington, D.C. Peter, thanks for coming on.
Joe, thanks for having me on. It's a real pleasure.
So, Peter, one of the things I wanted to dive in is you have been writing quite a bit about the latest grouping of trade tariffs that have been coming out, the Section 232s and all the others you've been talking about, budget deficits. I feel like in the backdrop of all of this, hanging over these massive trade and economic questions is this ongoing war with Iran. And I'm just wondering, is that fair to say? Is it fair to say that the war in Iran is actually maybe causing a bit more of a policy problem for this current White House over all these other trade and economic issues that you've been writing about?
Yeah, well, Joe, first of all, thanks for having me on. And I think it's a really important question. And I do think we are seeing some interplay between the war in Iran and the White House's tariff agenda. You know, as I think of it on the war in Iran, we're in kind of the phase of this war where it is a war of economic attrition on both sides, right? The Trump administration is imposing a naval blockade on Iran's oil exports. Iran is trying to reduce global oil exports from the Gulf by keeping the Strait of Hormuz closed, and that is keeping energy prices elevated, at least where they were at the beginning of the year, going into a midterm. We are in a higher oil price environment, which is politically challenging for the president. And interestingly, one thing you see the president having done over the last month or so is having made a decision not to take U.S. tariff rates all the way back to where they were at the beginning of this year before the Supreme Court ruled his first round of tariffs illegal. So, you know, his average tariff rate at the beginning of the year was maybe about 15% or so. After the Supreme Court, that fell to about 10%. They have said, you know, they said at the time, we're going to fully recreate these tariff rates, but they haven't actually done so. They've kind of kept them more in that 10 to 11% range. And I do think that's because the war in Iran has made energy prices and thus inflation run a little bit hotter than it otherwise would have. And I do think that's, you know, we still have tariff man for a president. We got to be direct about that. But I do think that has made them a little bit more cautious about fully reimposing the full tariff rates they had before the Supreme Court ruled in February.
So more of a practical approach this time than maybe what we saw about a year and a half ago, Peter.
Yeah, I think that's correct. I actually think one of the stories of Trump tariffs over the course of really starting late last year is that beneath the headlines, beneath a president who continues to want to talk about tariffs, lean into tariffs, but beneath those headlines, you have begun to see the Trump administration take a more practical approach. You know, so as I say, he has not fully recreated the tariffs, the sort of high tariff rates that he had earlier this year. I don't want to minimize them. They're still several times higher than they were when he came in, but, you know, they are a couple of percentage points lower. But we've also seen him take, often quiet, you know, sometimes on Friday afternoon, take measures to exempt different kinds of price sensitive products from the tariffs, right? So late last year, earlier this year, they exempted a bunch of foodstuffs from the tariffs to try to take some of that price pressure off. They have very quietly, made sure that they are exempting farm and fertilizer inputs. They did that earlier this spring. So, again, they want to be able to talk about tariffs. It is a very aggressive tariff regime compared to what we've seen in recent years. But I think they have pivoted to be a little bit more pragmatic than they were, kind of peak tariff last spring, last summer.
Peter, we mentioned in the intro to you that you worked with the Biden administration, White House Senior Director for International Economics. I do wonder if you think now that in terms of international economics, you look around the world, are we in a completely new era? And whether it's tariffs, investments in companies, governments taking investments in companies, onshoring, that we are, whoever is in the White House, whatever happens in the midterms, who's ever in the White House next, that this is our new era when it comes to what companies and countries are doing to kind of protect themselves.
Yeah, I think we are in a quite different era, certainly at a policy level. I mean, we talked about tariffs. You bring up another very important point on government equity investments. I think this is often underappreciated by the public here in the U.S. The Trump administration has taken it's either 35 or 37 different equity stakes with a market value of 60 or 70 billion dollars today. Just on a straight line trajectory, we're probably looking at, by the end of the Trump administration, I don't know, 100 to 200 equity stakes, 100 to 200 billion in market cap. Like, this is very different from what we have seen in the past. And I do think we are in a new era when it comes to policy, whether it's trade policy and tariffs, whether it is this sort of supply chain policy, whether it is these equity investments. I think there's still an open question about, okay, we have a very different policies, but what is this going to do on the data? Because, for all the tariffs that were imposed over the last year and a half, the U.S. trade deficit has basically been unchanged over the last 6 months.
It's pretty wild, right?
And I think we have to be realistic that policy is changing. The data has not yet caught up with the policy changes.
But can I just real quickly, like 20, 30 seconds, whoever is next in the White House, you think these kind of policies continue? If it's a Democrat, if it's a socialist, if it's a communist, who knows? But I mean
there will
this continues.
There will certainly be differences with the next president, but I do think we are in a structurally higher tariff environment than we were a couple of years ago. And I do also think this kind of idea of a more activist, interventionist government in markets is going to be here to stay, though whether it, partly rolls back, I think, is an open question.
I feel like there's a book in there for you, Peter. There's so much on the table for this, but I do want to pivot. We have the meeting from Xi Jinping, the president of China, that's supposed to be coming up in the next month with Donald Trump, the president of the United States. All of this tariff discussion, like you said, we've seen polysilicon tariff announcement come out, drone tariff come out. All of this is slowly coming out ahead of that meeting. How do we position the importance of that meeting and what we're seeing from this White House right now in the weeks leading up to it?
Yeah, it is interesting to me that we have seen some continued action again that is clearly focused on China, even if sort of the stated reason is more general, right? It wasn't Chinese polysilicon tariffs, it was polysilicon tariffs, but this is really all about China. Similarly, we have seen the Federal Communications Commission, roll out some bans on robots, on power inverters. These are also not stated to be about China, but are about China. It has been interesting to me to see the Trump administration continue to put some pressure on China in advance of the Xi meeting. Sometimes you think, there'll be a period of quiet before a summit like that to keep the diplomatic waters calm. The Trump administration has clearly been willing to put some chips on the table in advance of that meeting. I think what'll be interesting to see is does the Trump administration negotiate any of this away, or are they setting a new baseline going into that negotiation with Xi to say, hey, this is what we've done. We're only going to be talking about the future.
Well, on that, I just want to throw in, the U.S. planning to warn dozens of countries that they'll be shut out of a U.S.-led AI coalition if they sign on to a similar framework proposed by China. This is coming out of Reuters. Is it just U.S. reminding China of potentially the power they can still wield? Or are they serious about this? This is one of the big races and wars of our time, it feels like.
I think the Trump administration, although I think the Trump administration is internally divided sometimes about they want the decoupling with China to go. Clearly on AI, they are quite committed to an aggressive American preeminence posture. We've seen that with their, kind of diplomatic initiatives. We've seen that with their kind of accelerationist posture, putting aside the issues with this recently with Anthropic on model safety, but they clearly want to have an accelerationist posture here vis-a-vis China on AI. That said, I do think both Trump and Xi will want to talk about AI next month at Mar-a-Lago, and I won't be surprised if we see at least some rhetorical talk around cooperation on safety and the like. I don't think that's necessarily mutually exclusive. I think the U.S. would like to have those negotiations from kind of a position of strength, but I do think there will be some desire to cooperate on some core safety principles.
Just as a quick one, though, Peter, there's a lot of concern in the circles that I speak to and the circles that you run in as well, that this is a tough meeting for Donald Trump. Because in the minds of a lot of folks who've been around this space for a long time, they feel like Xi Jinping holds a lot more cards than the president of the United States does at this moment. Do you think that is fair directionally?
I think both governments here hold quite a number of cards. Like clearly the Chinese continue to hold a lot of leverage through their control of rare earths. The Trump administration is trying to reduce U.S. dependencies, but that's a 2, 3 year, 4 year kind of play. The Chinese continue to have a lot of leverage there. Clearly, actually, the Chinese, we talked about oil markets earlier, like the Chinese have actually been incredibly helpful in keeping oil prices from going even higher because they've been releasing enormous amounts from stockpiles. Right. I do think President Trump is going to want that to continue. I think the Chinese have a lot of cards. Of course, we do too, right? We continue to have a lot of cards in the financial domain, in the technology domain, and the like.
Yeah. I would love to be a fly on the wall. It's like that ultimate frenemy relationship. Peter, you rock. This was really fun. Thank you so much. Peter Harrell, visiting scholar at Georgetown Institute of International Economic Law, former Biden White House Senior Director for International Economics. Great to have him here. Hey, when Joe and I come back, the jarring turn for one of Wall Street's wealthiest financiers. That's next.
It's 2:40 on Wall Street. I'm Amy Morris. Paramount Skydance now requesting a $1.88 billion bond from the 12 states that have filed an antitrust lawsuit over the media giant's pending merger with Warner Brothers Discovery. U.S. corporate blue chip bond sales logged a record haul for August. Companies selling more than $145 billion of debt. A flare-up in Middle East violence lifted oil prices and dragged down stocks on concerns that an escalation of the war could fuel inflation. We check those markets for you all day long. Here at Bloomberg, the S&P 500 down 0.4%, NASDAQ down 0.25%, the Dow down nearly 0.5%, 10-year Treasury yield at 4.72%, the 2-year yield at 4.17%. Crude oil about 2.5% higher now. WTI topping $84 a barrel and Brent near $91 a barrel. Anthropic telling potential investors its revenue jumped at least 14-fold in the second quarter compared to last year. Documents seen by Bloomberg show the Claude chatbot maker reporting $47 billion in annualized revenue. Compare that to $40 billion for OpenAI. Snapchat paring its losses now to 3%. It was down as much as 16%. Wall Street continuing to digest a pivotal ruling from the 9th U.S. Circuit Court of Appeals alongside heavy insider stock sales. Snap dropping about 33% year to date. Sources tell Bloomberg Mark Walter has explored selling his stake in Chelsea Football Club to Clearlake Capital, the majority owner of the club. Walter's holding company, TWG Global, has been looking to pull off a range of deals in a bid to clean up loans on his insurer's balance sheet that have drawn scrutiny from federal prosecutors. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Back to Bloomberg Businessweek Daily now with Carol Massar and Joe Do.
All right, good stuff. Amy Morris in for Charlie Pellet. Hey, a Gulfstream, a $367 billion asset management firm, not too shabby.
Not bad.
An effort to revive the woolly mammoth. I had no idea. Ownership of a storied and iconic NBA team until last week. A stake in Chelsea Football Club, and a federal probe, and the financial troubles that have followed that led to a possible sale of that Chelsea Football Club, and it did lead to a sale of the LA Leakers that we learned last week. This is the life of the CEO of Guggenheim Partners as he rushes a makeover amid it all. Talk about a full plate. It is today's Bloomberg Big Take, and joining us is Sri Natarajan, Bloomberg News Chief Wall Street Correspondent here in studio. Sri, I feel like we've seen these stories before, these people that achieve incredible levels of success, and then they either stumble or kind of fall from on high. He's got a full plate. Where is he? And tell us about the things that he's kind of dealing with.
No, look, the whole storyline is interesting because of who he is, Mark Walter, right? It's not just a name that you would recognize on Wall Street, which you would, because on Wall Street you have his giant asset manager, Guggenheim Investments, his broker-dealer that's run by the former Bear Stearns CEO, Alan Schwartz. But also a name that should be known on Main Street and has bled through to that space because in his stable of sports team are the Dodgers, the Chelsea Football Club, Lakers, Cadillac F1 team, the Professional Women's Hockey League where the winner plays for the Walter Cup. So here's someone who's at that intersection of Main Street and Wall Street. So when you have this sort of money trouble that pops up, and money trouble is perhaps a very loose term for what is happening right now, because he also owns insurers, and as the feds probe how these insurers made loans, whether they made loans to affiliated assets or not, it's clearly raised the temperature a little bit. All our reporting shows that he has been accelerating and rushing efforts to try and clean up that insurance balance sheet. But the spillover effect of that, as a result of that, you are seeing some big ticket, important trophy assets being taken away from him potentially.
Very
Today's news story
too,
talks
right?
about the Chelsea stake going to another Chelsea owner, Clearlake. No deals there, but the talks are happening, and they seem to be happening in the last few days. Last week, you had that surprise sale of the Los Angeles Lakers. The headline figure says a $12.5 billion record-breaking sale. Sounds great, but when was the last time you've heard of a professional sports team like that, of that stature, getting flipped in less than a year, as if it was some Jersey Shore mansion?
Hey, watch about Jersey. Hey, I'm a Jersey girl.
I had to throw
You're
that
a Jersey
in just
guy,
for
aren't
you.
I went to school in New Jersey.
He's a Florida guy. Don't forget that.
Thank you.
All right. So as you dig into this story, I do wonder, is this the guy who stumbles and falls and then is gone? Or is he able, I mean, he's got so many coveted assets. Is this enough? But then when you've got also a federal probe, you do wonder what's the implications longer term.
Right. The implications on what's happening to your cabinet of assets and whether that grows or, shrinks is one thing. What happens to a federal probe is a whole another thing. So I don't know if we can square away the two right now. We are obviously seeing as they try and remediate the issue with his insurance firms. And again, to explain to our listeners and viewers what exactly the issue is Mark Walter owns an insurance firm. Through that insurance firm, they were getting loans to fund other parts of Mark Walter's sprawling empire. The problem was a lot of those loans were tagged as unaffiliated. When they did a review, they suddenly said, at least one of the bigger insurers, Delaware Life, that he owns, said, our affiliated assets have gone up from 3% to 40% after we did some checks. And why did they do the checks? Because they got subpoenas from the feds. So the problem is real. And he'll have to find a way to get through that. Again, it's a federal probe that matters, and we're all paying attention to see where that goes. But you are seeing the dynamic of that in some of these big asset sale and discussions.
This is a story that every day there's some new scoop coming out from us or from others. It just does not go away. Can you kind of dive into that aspect, coupled with you sitting down and saying, you know what, let's do a profile of this man. Let's explain to people who obviously are interested, both in the sports world and the finance world, who he is, and catching them up to speed and knowing this is maybe just the beginning.
And that's always a challenge with the fast-moving news cycle. There are a lot of developments happening, and you will find news interest in different corners of that empire just because of all that he owns. How often do you see Sportico and the New York Times sports section and Bloomberg and the Financial Times and the Wall Street Journal focusing on the same subject, focusing on the same person? That is exactly what's happening right now. But also an interesting life story. We all know him for that Guggenheim name. He has nothing to do with that great American dynasty. He's not a direct descendant. It was a chance meeting where Mark Walter was running a financial firm in the backwaters of Chicago, or at least in the financial backwaters in Chicago, to be clear, and had this meeting with a great-grandson of the original Guggenheim baron, the mining baron Meyer Guggenheim. Parlayed that into this big empire that he has because he folded his firm into that family office, Guggenheim family office. And really, when you think of Guggenheim today, you think of this man who grew up in Cedar Rapids, Iowa, son of a factory worker, with nothing to do with that great dynasty, but that's the name you think of. And then over time, that has expanded. You have the Dodgers, Lakers, and all these other teams. Last month, he was getting feted at the Rose Garden by President Donald Trump, where the president calls him my friend Mark Walter. Then compared him to George Steinbrenner, famous for his win-at-all-cost mentality. Again, Steinbrenner, rest in peace, was a polarizing figure. So it's not really clear to me whether Mark Walter would have heard that comparison and been happy about it or not so thrilled.
We've only got about a minute left here. And there, in the story, it's like he talks about, I hate losing. He said this back in 2024 next to Lakers legend turned business ally Magic Johnson. I just can't stand it. He also says, I was used to being poor and happy. Then I just got in business and was competitive and things worked out. I mean, what is it in kind of digging into his past and understanding a little bit about who he is and what he's about, that really just struck you as he is really kind of fighting for his, I don't want to say fighting for his life, I don't want to put drama, but what he does will determine kind of where this goes.
More importantly, what happens with the federal probe will determine what his legacy and standing will be. And it's not like in the past, the feds haven't tried to look at other aspects of his business empire. The SEC in years past at various stages, without bringing any cases, without accusing anyone of wrongdoing, but at least had explored various investigations that looked at elements of conflicts of interest. That is what this current probe also seems to at least reek of. It seems to have some of the same flavors.
Yeah.
But really, the outcome of this probe will tell us how we'll see his story. Is he, at the end of the day, the epitome of that true great American dream?
Right.
From nothing to becoming one of America's greatest, wealthiest financiers?
Yeah.
Is it financial ingenuity or something worse? And we'll have to wait to see what that is.
Highly recommend. This is one of the stories that Sri, you and the team always just do so well. It's on the Bloomberg. It's on Bloomberg.com. Thank you. It's a great Monday read. Sri Natarajan, Bloomberg News Chief Wall Street Correspondent. Hey, when we come back, a check on trading on this Monday and stocks on the move. Stick around. Harrell Masser, Joe Doe, and this is Bloomberg Businessweek Daily.
This is Bloomberg Businessweek Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody. Coming up on the last hour of trading here on Bloomberg Businessweek Daily, first trading day of the week. Carol Masser along with Joe Doe in for Tim Stenovec. And you take a look at the trade, Joe, and we definitely, on the equity side of things, just bouncing off our lows of this session, but call it essentially unchanged on the NASDAQ 100, right? Down about 1/3% in the S&P 500. Not super dramatic.
Yeah, and trading volume intraday is down.
Yeah.
I said it earlier. It just feels like the depths of August.
It does feel like it. It was kind of gloomy here in New York, too. I feel like this morning it was kind of gray. It almost felt like fall. Last night when I was walking my dogs, it just felt like a little windy, like starting to feel like fall. The dogs went after some acorns. It kind of freaked me out because that always says to me fall. I am feeling, though, September, and especially as we count down to the midterms, there's going to be a lot coming at us.
Yeah, I was talking to a couple people this morning who were just saying to me, get ready. It's going to be a fire hose we're all going to be drinking from in September, October.
It definitely feels that way. I'm so glad, too, you brought up the importance of this, China meeting between President Trump and President Xi. I mean, those two, they just, to some extent, it feels like to me, carving up the world on a lot of different issues.
It is the world's two largest economies. Mm-hmm. The President of the United States, if you talk to China scholars, they're the ones who point out that Donald Trump, during his first term, was the first president to really say, like, we've got issues and we have to address them. Now, there's a whole nother debate after that. Like, do you go super hawkish or less so? And that's clearly what's on the table coming up in September.
And let's not forget, President Biden carried through on a lot of the pushback on China, right?
Absolutely.
It's one thing it feels like both parties tend to agree on, something that's going to be on our radar. Hey, also on our radar, I'm Carol Massar along with Joe Doe. Stocks on the move. So let's get to it with Bloomberg TV markets correspondent Norma Melinda. She is in the house. We got to talk about semiconductors moving around.
They have been on a tear this year, but today we're seeing them as some of the biggest, the best performers in the S&P 500. Now, this is all thanks to Anthropic. We saw private companies like Anthropic actually reporting strong growth. This is really a sign of real AI monetization. And so we did see that Anthropic's quarterly revenue jumped at least 14-fold versus a year prior.
We're still stunned.
I can't believe it.
Insane numbers that they're putting up here. But SanDisk, Marvell, Micron, some of those names in the green substantially. And of course, about all three of those names posting some really great gains so far year to date in the triple digits, actually.
And those tickers, SNDK for SanDisk, Marvell, MRVL, and of course, Micron, MU. All right, from that, we go to an airline. JetBlue?
Yes, a stock to the downside, ticker JBLU. Now, the company actually lost its last standing bullish analyst on Wall Street. So now if you take a look at the A&R page on the terminal, you're going to see 0 buys for this stock, 10 holds and 7 sells. Now, the company was actually Seaport. They downgraded the stock from buy to neutral. And of course, like almost every other airline, what we're seeing analysts talking about is the war in the Middle East and the impact, of course, on margins, of course, on the fuel costs. And that's what you're really seeing hitting JetBlue here. It's, wild. But the stock is up about 16% year to date. But also what Seaport calls out is the airline's heavy debt load. So those are some of the two main factors that it's essentially using as the reasoning for this downgrade here.
Can I just tell you, 30% of the float is short.
Wow.
That's negative sentiment. I remember when they were the newer kid in town, everybody was talking about them. They didn't have the legacy costs, the legacy overhead, if you will, and it's a very different environment for JetBlue, that's for sure. All right, so ticker JBLU. Can we talk sneakers?
Yeah, and Nike. Ticker NKE. Stock is down, actually hitting its lowest level in about 12 years. This is since 2014. And this all is coming after some new data that we got out of UBS. They're saying that the company's brand turnaround still essentially remains elusive. We know that this is a stock that's down about nearly 40% so far this year and has really been struggling to demonstrate a turnaround story. So investors, I guess, just ditching even more shares of the company now.
Do you wear Nike? Do you wear Nike?
I do. I'm a runner. My wife and I are big runners.
Yeah.
And I have recently been wearing not Nike running shoes for various reasons. And I used to talk to one of our retail reporters about some of the problems that Nike had faced, especially when they took all their Nike shoes out of local running stores across the country.
Oh, interesting.
Because most runners go to their local running store to buy their shoes because they trust the sales reps in those local running stores.
Yeah.
Nike said, we'll just do it out of our own stores.
Wow.
And the new CEO talked about this, and we've had a few stories about it on Businessweek. But yeah, fascinating stuff.
Yeah, if you think about it, I'm not a runner, but I agree that I've heard from runners that that's where you go, right? You figure out what really works well. They look at you, what you need, right? And it's very specific.
Yeah.
It's
interesting though, because even Dick's Sporting Goods, they were talking about the fact that essentially Nike could be a reason why Dick's actually performs well, because a lot of analysts are actually betting on the fact that Nike's going to have this turnaround. But everyone's been kind of waiting here for quite a while with bated breath.
Wow.
Yeah, stock down, as you said, 40% year to date. Good stuff. As always, Nora, thank you so much. Norma Melinda, Bloomberg TV markets correspondent. For more conversations like this, check out our Stock Movers podcast. They are 5-minute episodes. Big winners, big losers in the stock market. And you can listen to it on Apple, Spotify, or anywhere you get your podcasts. We are not done. Coming up in the next 2 hours on Bloomberg Businessweek Daily, we're going to talk a little bit more about all the stuff that's going through the White House right now, the geopolitical impacts. We've also got the Gen Z hustler making $75,000 a month on kiosks and driving a Lambo, just like you and me.
Of course.
Stick around on TV. The close coming your way. Joe and I continue on Businessweek Daily.